The other news flow that we're discussing is on crude. Crude prices have fallen about 2% as a stronger dollar and the likelihood of more rate hikes by the Fed has offset the optimism over higher demand. Jonathan Barratt, the CIO at Probis Securities, joins us now to talk about that. Jonathan, demand is coming back, which is, of course, a good thing. We just saw the China GDP data, which was strong at about 4.5%, and crude is now back at $85 a barrel. Your thoughts on which way things could head over the next month or two?
Yeah, sure, no problem. It's actually really encouraging data from China, there's no doubt about it. Particularly the retail sales was up around about 10% year on year. But I think there are generally three things that we've got to focus on. The first thing, obviously, is the Chinese data, how the demand sets in for there. The second thing is whether or not the US will flow into a recession as tipped by the Fed, or a small recession. And thirdly, how the Ukraine coalition is going to react to Russia's increase in oil exports and revenue. I mean, they've just come up to levels prior to the Ukraine invasion, about 8.1 million barrels a day. So I think there are the three focuses that I'm looking at the moment to see if we can get that direction for the price of crude.
Okay, Jonathan, hi, good morning. So how is the market now balanced after this surprise production cut that OPEC Plus announced? Is it getting a little tight on the supply side? Because the China data suggests that at least demand from, that region, that part of the world will probably remain strong.
Well, I think it is quite interesting because after we had that announcement by OPEC, and we saw the price move up, it's just flatlined, basically. So I think the market's now trying to take lead from the general economics. In my mind, it needs to come back a little bit. If you look at quarter 2, quarter 3 and 4 forecasts, it is for a pickup in demand, and that's the forecast that most of us have had. And as a result of that, oil prices should be trading up around that 90.95. As to whether it'll get to that level, I think it's all about those topics that I've mentioned, in particularly the potential recession. We do know the Fed is continuing to raise rates. They might have reached terminal very close to the next 2 or 3 rates. But how that'll affect how deep a recession will be will, in my mind, determine where crude oil prices would go. I would like to see crude softer at the moment. From a technical perspective, I'd like to fill in its gap, 85, maybe back down to 82, and then stabilise there for some time. But just to stay in this little area at the moment is quite nerve-wracking.
All right. Hi, Jonathan. We got the upside, I think $90 to $95 odd is what you just mentioned. But, we here in India, we'd like to know the downside, actually.
Yep.
Do you see crude breaking that $80 per barrel mark, maybe trend a little bit lower?
Look, I think so. I think, look, it really will depend on the demand destruction that we potentially seen, as we have seen before. It's that ability for the market to say, well, look, we're going into a recession, interest rates are too high, what are you going to do about it? And if that is the case, and that's the talk around town, then prices will break through that US 80. Remember the speed at which it did collapse, and the speed at which the momentum sort of picked up to the downside. Crude has had a natural ability to stay in a tight range. I think it is that, but I think the telling points will be the height of these interest rates and how that will affect demand, retail consumption, travelling, all those sorts of things. So I think quite important, and also not to mention the weather, because that's highly critical as well. But I would like to see a little bit of a correction here before prices start to trend higher, but I don't see too much on the top side unless we get an imponderable occurring.
So you're saying that in Q3 and Q4, oil prices could go to $90 a barrel, but in the near term, very near term, you see it stabilize around this mark itself, correct?
Yeah, in the near term, I actually see it trading back to that 82. It's a funny thing when you look at the technicals. Normally, you've got a little bit of a gap to fill. Most technical traders like to see that. When I see there's more talk of that recession, more data, then I think we will come back a little bit. But as we've mentioned, as you've mentioned, China is the largest consumer. And if that economy starts to go gangbusters, then I think the demand dynamics that we revealed at the beginning of the year will start to play. I think both are pulling and pulling each other away. And that's why we've got that market in this tight range. I would like to see it lower before going higher.
So would we, Jonathan. I can tell you that. We consumers in India. Thank you very much. Always a pleasure talking to you. Have a great day. And we look forward to our next conversation.
Thank you very much. Bye-bye.
Bye-bye. We'll take a break on